Welcome to another technical analysis on cryptocurrency, and this time it's AVAX on Avalanche. And my name is Sam from TradeToProspa. So you haven't seen me before, please do so. Subscribe, have a look at our past videos. If you like what you see, continue to watch and share. So what I'm going to do is do a high level overlook, and then dig into this current scenario and what's taking place, and give you another perspective, I suppose, from others if they do. But my videos are mostly technical, and so you need a background on uh, technical analysis elements like Fibonacci, alleyway theory, and so on. If you have had the basics, you will understand what I'm talking about. So what we've done is mapped out our Fibonacci, as you can see, and based on some simple ways of doing things. And anyway, it has confluence, and we'll continue. What I'd like to show you is this fib from a big perspective. So we have our from 0 to 1. So let's get the pen out. I picked those two references, and you can see that the topping was on 1.272, so it makes sense. This is our relatively neckline for the top. And a typical strategy is a topping off structure, which is usually some sort of triangle or head and shoulders, whatever the case may be. And you can see that we've come down to this level, and we'll explain how we got that, and a key level of resistance. So we have a trend line here, support, trend line, low confluence, and it's matching the 618. So that's why we're finding resistance. So I don't think we're going to go anywhere until we break this trend line as well as the 618 level. Moving on, let's go on to the next one. This Fibonacci, not needed. This one here, we did a fib extension. So references the top, bottom, top, and you can see the fib extension of 1, which is pretty much why we got this bottom. Just a bit over, but that explains it. And you can see how these are got confluence with certain elements on the chart. They all have significant elements. This is a wave 5 count, so I don't think we've put it in there, so we'll do that. So we roughly have our 1, 2, 3, 4, what seems to be 5. Now, if this is a continue on, I had to say it, but if this is a continue on bear market, we might get a bigger move, get a pullback. We might get a bigger move, breakout. Now let's have a closer look as to what that might be like. So this is potentially a correction wave, guys. Yep. I don't know if we can go and just assume that it's going to be a great bullish market. But anyway, that's what we have. And I do believe that we're going to have a bit of a rally, but not necessarily a reversal anytime soon. Usually, from historical facts, we get from there to there, maybe that's our pivot point. We might get these as our target. We might get that level there. So A, B's A, and a B, and a C might get further up. Then we've got these other levels as well. I'll use those key Fibonacci levels. Here, I do believe if this was a 5 count, not just an ABC, but a 5 count, we might be able to get into this range. But that's where I got my targets, somewhere in here. That is my target range. And give us a sec. We're nice to shade it. Yeah, there we go. Any color. So that's what I have. And then we're likely to come back down. So if that's a 5 count, we might get an A, B, C. Maybe further down. Maybe down there. And interesting enough, this might actually work. Big, massive trend line. So we got, yeah, this could be it there. So that might come into handy. So we have our 5 count for ABC, and we'll get a correction. Might be there, might be further down, who knows. Um, and then we get the bull market. That's my thinking, guys. Then we get the bull market. Now, I'll explain Bitcoin in the past, and this is probably going to be the same. And you can also imagine that this is let's just check this out. Let's see. Okay, that doesn't quite work. That definitely works. So maybe I'll just use this trend line to align that one there. Yeah, there we go. 2 lines, and then that probably makes sense from that perspective. Okay, so I'll leave it at that. Now, what else do we have? Is Fibonacci. We've done that. Fib extension. All right, so what we need to do, just give me a sec. Let's just get rid of this one. So this fib extension here, let's just change it black so it stands out a bit better. You can see, well, I just did that one color, right? Oh, I want all of it black. There we go. So you can see this fib extension is from here. We got a reference point, a swing high, and a swing low. And then we've got all these fibs along the way. So what you can see right now, the confluence, here we go, 618. Perfect. We don't use the bottom because that could be overperformance. It's in many cases we use a second, where there's more, it makes more sense as a support level. So just keep that as a tip. At times that you need to use not the bottom. Sometimes you just need to use a level that makes sense. And you can see how then we'll look at a number of stuff and you go, okay, it's got confluence all along the way, as you can see. Perfect. So this 618, along with this trend line, made it a strong resistance and it's pushed it down. It's coming to this level. And now we're going to look at trading strategies. This is where it becomes difficult. I do believe we might get a sort of a bear flag, a bull flag of some sort, wherever that formation is likely to be that way, and then we break them up. So we get our ABC. So this is a strong move, and this is likely to be our A wave at this point. I'm thinking B and a C wave. Okay, C wave. If it breaks this 618, I'll be looking at the one as the main one, and let's have a look at it from another perspective now. So all this stuff here we can get rid of because that's right. And where's this one? Just make it clearer. We have our 10 and 20 moving average. We add that to it. I don't want the crossovers of the 10 and moving average at the moment. And you can see, and we add our, let's see what indicators we have. All right, we've got the RSI. Perfect. Now, this is a daily. And you can see that daily level was broken and it's come down. So now we're still above the 50%. So a long way to go before we can say become bearish. It needs to go below the 50%. Let's just fix this up for a sec. I'm pedantic with certain things, standards. And you can see this is a new chart that I was created, and I'm just going through the motion. I like to add the MACD. And my own Phoenix. from that, we can see that this has got these crossed over. We've got the dots which show overextension or bearish divergence coming in. So it's overextended and it's headed down south. Now these red one, the next secondary RSI, until it comes down to below 50%, this is not going to be a deeper correction. At the moment, it's a lighter correction. Let's go to the 12-hour. So 12 hours hit the R10, 20 moving average. Ideally, on the 12-hour, we want to see, let's get rid of this. So this has gone pulling down. It hasn't quite done. We'd like to see a bullish candle of some sort taking place. It's not bullish yet, and we've still got an hour. So it doesn't look the best. So we might hold on for a short time. Let's get rid of this. I just want the MACD at the moment. Actually, you can see from the RSI perspective, we've dropped the moving average on the RSI, so it's pretty bearish at the moment. We can get I think we can do something similar to this. To tell you the truth, like that, we can get a bit of a move, and then maybe extend, double top, and then come back down and get our B move. Yeah. So there might be a double top scenario. Um, Look at the candlesticks, but that definitely took place, and that took place around here. So I'll be looking for something like that for short term. Jump in. I do still feel this should become deeper. Now, the MACD's crossed over, very similar to this. It's crossed over. So 12-hour is not really it's not ideal. And you can see this bearish divergence taking place on the MACD, very similar to, that was a double. So that's a swing failure trade there, really. So let's have a look at this as an example. That's our trend line. Yep, that was our trend line. And when we break that, we go down deeper. Get it? So this is our potential trend line if it bounces. If it doesn't, but that was the first that broke down. Actually, give it a bit. That was the breakdown. That was our shorting position there. Again, bearish divergence, very very clear. Bearish divergence coming into place. Prices going up, demand's dropping. Now we can see that. I think we need to see something here before we can put this trend line and then use it. But I do feel like we might be able to make a double top, or even a failed swing trade, which is 618. So let's have a look at that. I think we're going to have a failed swing trade set up. So 618. Maybe I'll just use that's one level. So I'll be looking for resistance here, and the second one potentially resistance. This is our neckline, and so if you know the swing failure trade, um, that's our reference point. We've got our top. If we get a rejection here, then we're going to come down deeper, and our B. So we might get a level here. So I'll be interested in this area for trade. Yep. We might just double that topping structure. Last time it really capitulated, but that was, I think, the FTX debacle. So it might not do that again. So we might actually get some natural movement here. This is going to make sense because this is where previous resistance was, and it's the Fibonacci 238. So if this doesn't hold, we are likely to come down. But I do feel like this is a consolidation area potentially for a bigger move to the top, and that will be our target. So that's what I have at the moment, just for using that scenario. It's not an easy area to trade, guys, and let's just do this for a sec. We'll look at the MACD cross. So the 12, it's going to be the daily. I think the daily is going to be the one that we're going to look for setup. And yeah, so again, the 10 and that's a 10 moving average. The 20 could come down to this level. That's a 20 moving average. And so someone here, that is our range that I'll be looking for. So we do have one there if it goes bullish, but that is the level I'm looking for. And let's do this. Another strategy. What is our previous? All right, we'll do that. Okay, that's our level then. That makes 0.5 here, 0.382. That still fits in our requirements. So I do feel like this is going to come down. The way it's closing, we've got, okay, that's a 13-hour one. Okay. So again, it's right on our box. So it's in our range. It might be a B or further deeper. Can't tell you at this point. That's not finished. It's not a bullish engulfing. It's not a bullish candle, but once this closes, let's see on the 12-hour. Yeah, it's not that. Yeah, I like to see the next candle. To tell the truth, next candle. Well, we've got an hour to go. The next candle might give us an indicator if it's going to go up. I have a feeling it's going to do this. Yeah, double top or something, or the resistance at these red lines. And that's it. Now, last bit. Give me a sec. Where is it? This is the concerning part for me, guys. This is the SP 500, and this is the daily candle. It's dropped. That is my support level now, and this is looking bearish, and it could pull back deeper. If it pulls back past this, it's going to be very bearish. And the SP 500, as you can see there, this is a daily. Let's just do the 4-hour. So you can see how this is bearish. It's really getting pulled back. Last time we had some whiplash here with the CPI results. It went up and down a fair bit, and then there you go. So you can see what took place. Like it's really topping structure, really, and then it's just dropping. So this is looking weak. If SP 500 is looking weak, this is the 4-hour. This is the daily. You still have upward momentum, but the MACD, if this is to come curl down, and you can see there's a rejection here as well. Unless it break, I want to see this to go bullish on Bitcoin. We need to break this level to go bullish. So then this is the target area, what I had, and then we'll reassess. But if this keeps dropping and dropping, I can't see how Bitcoin's going to keep going up. So at the moment, it's not looking good from that perspective. Where's the Dixie? Let's have a look at the Dixie for a sec. So the Dixie is on our macro trend line. You can see that support level along with the 382. So we might be able to see some. So nothing there yet. There's no reversal, but there is support on that trend line, as you can see. This is where if this was to start curling up, bullish divergence building, and refusing to go down, I can say even up to that level. If it's like that, making a reversal pattern, it's not going to look good at all. So if we do on the weekly, let's see our indicator. So that's the weekly candle. At the moment, it's not finished yet. The weekly might show us, but I can see the MACD slowly finding support. I like this. If these were to cross over, definitely bullish divergence. At the moment, there's none. On the 3-day, this is the angle is changing. You can see. I don't know what that's probably the daily. So keep an eye on the 3-day. That is a trend line that needs a break. These are reversal patterns along. There's no reversal yet. Still downward pressure, but you can see the MACD is coming back up. 2-day. So that's my concern, that this could keep dropping, and then therefore Bitcoin and the likes of the alts will keep dropping as well. So this might even go all the way down if